going to be talking about is the types of government assistance that people have received through the COVID programs, the timing of receiving that money, so the cash flow impact, and we're going to compare that to the time when the tax has to be paid. So generally, the various governments, the provincial and the federal governments, came up with a number of programs that some of which are still operating, some of which have closed. And they pretty much divided up into a couple of categories. There were loans, the CEBA, which we're going to talk about in more detail, which have to be repaid. So you get the money, you're allowed to use the money, but at some point you have to pay it back. We also have grants, and there's a portion of the CEBA that if you meet the criteria of paying it back on time, that amount of it becomes a grant. And then there's just pure income. The CERB is income, the wage subsidies are income, and the amount of money that you receive is taxable, but the timing of when you pay tax on that isn't as clear as it could be for sure. So the main programs we're going to, just settle that. Main programs we're going to talk about is the federal, the provincial, and how they're taxed. The federal programs are the wage subsidies, the CERB, and CEBA. The provincial program in Nova Scotia was administered mainly through Dalhousie, and they issued forms, T4As, to the people who received them. So we're going to talk a little bit about how you make sure you don't double count that income, because there's a form for it, so it goes on your tax return where that form belongs. So the programs, the first one we're going to talk about is what we've been calling CEWS, which is the Canada Emergency Wage Subsidy. That was paid to employers to cover up to 75% of their wages, and essentially that money was taxed when it was received. So if you received money in 2020, it's in your 2020 income. If you received the subsidies in 2021, it'll be in your 2021 income. And we'll look at how that might show up on your statements. I'm also going to say a few things about TEWS, which was the temporary emergency wage subsidy, which we're seeing some activity on right now because CRA is assessing the 2020 T4s, and they're having some problems with that. The most complicated of the programs is CEBA, the Canada Emergency Business Account. And there were initially $40,000 was provided to qualified businesses. And a portion of that is a grant if you pay it back on time. And then there was an additional $20,000 offered. And there's a different amount of that is a grant, but the timing of paying it back is the same. So I've got a couple of examples around that. What happens if you pay it back on time? What happens if you don't pay it back on time? When it would be taxed, which we'll go over. And the last one is CERB, which was received by individuals who were no longer able to receive employment income due to COVID. And there's been a couple of complications with that. First of all, there was no tax taken from CERB payments, which were given to individuals. So that created a situation where people who received CERB during the year ended up owing money when they filed their 2020 return, and will again when they file their 2021 return. So the government has, CRA in particular, has a deferral on when that tax has to be paid and how long you can avoid paying the tax without paying interest. So we're going to go over that. So the first thing is the wage subsidies. And there were two of them, and it was quite confusing during 2020 when these subsidies came out. The money you received from either one, either the temporary emergency wage subsidy or the Canada emergency wage subsidy, all of that is taxable income. The TEWS, the temporary one, applied to most employers in the country. It was 10% of the payroll, and it was deducted from source deductions. So when you were sending in the money that you send to CRA, because you've collected EI, CPP, and income tax from your employees, you were allowed to reduce that by 10%, essentially, to send them less money, even though you collected the money. So that had some limits, and we'll talk about those next. The Canada Emergency Wage Subsidy, that has continued, and it applied to fewer employers because it's based on revenue reductions. It's based on seeing that obviously that you have less revenue, which is sales essentially in 2020 than you had during a base period in 2019, sorry. And that, there are still people who are getting small amounts of subsidy now. And obviously that's entirely taxable. So the CEWS was only applied to payroll between March 18th and June 19th of 2020. So the reason we're still talking about it a bit is because of the T4s, which are still being reassessed by CRA. So we took that money, the 10% of payroll, from the tax portion of the source deductions. And the amount you could deduct was a $25,000 overall limit, $1,375 per employee, but absolutely only $25,000 maximum. And the amount you received under CEWS reduced CEWS, which sounds like poetry, but probably isn't. So the issue we're running into this fall is that the 2020 T4 summary that had to be sent in by February 28th of 2021, it would show that you didn't pay the amount that you should have for the source deductions. What we had expected was that CRA was going to have a box on the T4 summary where you could put in the amount of CEWS that you had claimed so that you could balance the T4s. As you know, I have an accounting practice. We did a couple hundred T4s last year. They were all, many of them were troublesome because everybody showed that they had a balance owing when they filed their 2020 T4s because of the amount of the temporary emergency wage subsidy. And then there was an additional form that had to be filed, the PD 27, which could be filed electronically, which just balanced the amount of CEWS that you had claimed. And that, with the T4 summary, should have meant that you didn't have to send them any money. What we are finding is CRA has this thing called a peer report, which is a pensionable income and earnings review report, where they're reporting that people have underpaid their source deductions and they want the money. They don't seem to have been able to always coordinate the PD 27s. We found that some of them weren't filed at all, or some of them weren't filed correctly. We haven't had as many troubles with the ones that we did, but we've been assisting our clients who had prepared their own T4 summaries into filing this PD 27 and avoiding having to actually pay the amount of the subsidy you were eligible to receive. So what you would find in your books, of course, is that you had collected money and you didn't send it in. So that actually reduces your wage expense, or you could report it as revenue. Yes, question in the chat that we got a notice that we overpaid. And I have had a few clients that have had that exact situation. And it looks like they processed the PD 27 twice. So it's kind of spotty. Some people's weren't processed, some of them were processed twice. So when that happens, they apparently have to send them a new PD 27, which they will then process, and it'll make that go away. So it's interesting because when I saw that, I said, well, who cares? If CRA thinks they owe me money, they'll probably figure it out, but they apparently won't figure it out unless you do something about it. So right now we are seeing that the 2020 T4 summaries are being reassessed. We've had quite a bit of activity in the last month or so from clients needing some help sorting that out. So if that happens, of course, it can be sorted out. You don't need to, lose that subsidy amount. Okay, so we got a question on it, whether we can claim subsidy retroactively. So I will actually come to that in a couple of minutes when we get, well, momentarily, I guess, when we get into CEWS. But I guess, having said that much about it, there is a time limit for each of the periods. They numbered the periods for the wage subsidy, this one, the Canada Emergency Wage Subsidy. What they did is they numbered each period, period 1, period 2, period 3, and they've been closing those periods after, I think it's like 6 months or so, and I don't think it's consistent, after that period closes. So if there are time periods you haven't applied for and the time period is still open, then yes, I believe you can apply. So CEWS is the Canada Emergency Wage Subsidy. It was by far the most interesting of them because it was way more money. So some people were eligible to receive, 75% of the wages for their employees as, just income from the government. It is, of course, taxable, but, it's certainly not complicated once you figure out the methodology for claiming, figuring out the subsidy and asking for the money. It was a little troublesome at the beginning, but once you get onto it, their forms were pretty much self-explanatory. So that amount of subsidy was directly deposited into people's bank accounts, and your choices are to either reduce your wages by that amount of the subsidy that you received, or to show the subsidy separate. So what I've done here is I've made a little chart. Of course, accountants are loving their little charts. And column A here is a company that is reporting the wage subsidy separate from wages. So you'll see that the bottom line here, the net income is the same either way that you do it. But company A is reporting their wages and then showing the wage subsidy. Whereas what company B is doing is just reducing the wages by the amount of the subsidy. Now, we would probably want to put in brackets there, net of subsidies of $46,000. So, I mean, you can do that either way. So, the question about that is, what's going to be most useful to you going forward? When you look back at 2021 and 2020, do you want to see the gross amount of wages that you paid with the subsidy shown separate so that you understand the amount of the the subsidies that you received, or do you want to just see the wages net? And as an accountant, of course, I would likely prefer to see people show the actual amount of wages separately and the wage subsidies separately as well. And typically, some people are reporting that in sales in the revenue section of their income statement, and other people are showing it down below, as we say, underneath income from operations, showing the wage subsidies separate. And I probably would prefer column A, because I think that it gives you more information about what's going on with your business than if you just net it. So the deal with the subsidies, if you end up having to pay them back, then they would be a tax deduction at that point. Because right now they're being handled as taxable income. But if for some reason, these amounts get reassessed and CRA decides that you weren't entitled to them, then you will get a deduction if you have to pay them back. And, I've had a few things to say about this since COVID started. Initially, the governments were very interested in shoveling money out to businesses and people to make sure we didn't have any big problems in the economy. And, those were essentially the politicians, and they moved very, very quickly, getting amounts like CEBA and CERB and the subsidies out. Eventually, in my view, and I should say the views expressed on this call are my views and not the views of Tyann's or anyone who funds them. In my view, eventually the bureaucrats will take over. And then we will have people who are going to go back and take a look at the calculations that were done to figure out whether your revenue had declined by enough in that period for you to be eligible for the subsidies. And, at that time, if we find out that CRA is going to disallow any of these subsidies, then, you pay them back, you're going to get a tax deduction for them. But it is not the intention that any of these subsidies are repayable. You receive them, you get to keep them, so you need to report them as income. So the only choices I see for reporting it is either to show it separately somewhere on your income statement, so you see the amount you received, or to net it out of your wages. And either way will work. You will end up, paying tax on this money. I think that was the question about that. Yeah, there's a question about CEBA in the chat, which we're about to talk about. But the subsidies are not repayable unless, of course, it's determined that you shouldn't have received them. Okay, so CEBA, by far the most interesting of the government's programs. Initially, it was $40,000 interest-free loan. If you repaid it, pay it by December 31st, 2022, so a year from next month, then $10,000 of that you get to keep. It is considered to be a grant at that point. And the first $40,000 that was available very easily. You only had to fill in your business number and the amount of the box 14 on your T4 summary. If you could do those two things, then you got the $40,000 almost immediately. The system was very simple. Then they added another $20,000, which had stricter requirements. In theory, the $20,000 should only have been available to people who could prove that they had at least $20,000 of non-deferrable expenses that they had to pay immediately. So some people had to send in the analysis of the $20,000 that they needed to spend. Other banks didn't ask for all that information. So, excuse me, some of what has happened with the administration of CEBA is that it hasn't been as clear how it's being administered. I've seen some stuff that have come up from the banks suggesting that you need to start making payments on it in 22, and that's not true. There's no amount that needs to be paid back until December 31st of 22, not until the last day. So the deal is that of the first 40 you received, if you pay back 30,000 of it by December 31st, 2022, you get to keep 10 grand. It's a grant. Of the additional 20,000, same repayment, December 31st, 2022, but that grant is 50%. So you get $10,000 if you repay that one. So of course I did another chart. The initial CEBA, 40,000, pay it back on time. The grant is 25%. The repayable amount is 30. So on December 30th, or maybe 29th of next year, if you pay back $30,000 on that CEBA loan, the other 10,000 you do not need to repay. It would be considered yours at that point. If you pay back $29,993, you won't get the grant. It's one of the things that is very intriguing about it. There's no proration. You have to pay it all back to get the grant. So we initially thought if people could only pay back a portion of it, they'd get a portion of the grant. That isn't true. The additional CEBA, if you got the 20,000 then in addition to the 40, your grant portion is 50%. So you need to pay back 10. So overall, if you took $60,000, the overall grant portion is 20,000. The repayable amount is 40. And you can't treat them separately, despite what they're saying here. If you owe 60 and you pay back 40, or sorry, if you owe 60, you pay back 30, you won't get the grant, even though you had fully repaid the $40,000 amount. And that's the way it stands right now. I don't know how suspicious you are of some of the government, pronouncements, but as we get closer to this time, they may make some further changes. Like right now, nobody is complaining about this because nobody's paying back the money. They're mostly people are waiting until the day they have to pay it back to actually pay it back. So we haven't heard any complaining about it. But I suspect that people are going to say, well, it's not really fair if I can only come up with, 29,000 of the 30 I have to pay. Can't I get a proration? So they may change that deal. Okay, so the question about when you have to declare the grant, yeah, I'm just getting into that because that's a little bit different. One of the things that accountants say all the time is that CRA is in charge of taxation and accountants are in charge of accounting. So a lot of times the numbers we report as income on our financial statements are the numbers that you pay tax on your tax return. But CEBA is a different scenario. The deal, just wait for my mouse to catch up here, is that CRA considers the amount of the money that will be a grant. Okay, here we go. Let me go back. My mouse wants to go ahead here. One more. Okay. So one of the CRA's pronouncements, and we spent a lot of time on this earlier in 21, was that CRA has clear instructions that the grant portion of the CEBA is taxable when you receive it. So I reported for my clients that took $40,000 in CEBA in 2020, I reported $10,000 of COVID-19 assistance as income on their tax return in 2020. And I did not, for any of my clients, report it as income in 2020, because in my opinion, they haven't earned that grant until they make the payment on December 31st, 2022. So it is a difference in the accounting for the grant and in the tax on the grant. So you would likely have reported that $10,000 in 2020 as income, even though it wasn't showing as income on your financial statements. Now, I hear that some accountants reported it as income in 2020 under the assumption that it was very likely that people were going to pay the whole amount back. I didn't do that. I'm not really good at saying that the future, I know what the future holds. So I didn't allow any of my clients to report that as income for accounting purposes, because as I said, in my view, it's not income until 2022, when they prove that they can pay back the grant portion. So taxable when you receive it, maybe not accounting income as of yet. So let's look at a couple of scenarios here. Maybe my mouse will talk to me. Okay, example number one. You received $40,000 in 2020. You declared 10,000 of that as income in 2020 on your tax return, and you paid tax on it. In 2022, you repaid the 30,000. There's no changes to your tax return because you have already declared that income and you've already paid tax on that income. In 2021, you took the additional $20,000. And once again, you would declare that $10,000 as income in 2021. You pay tax on that income in 2021. In 2022, you repay the 10,000 that you have to on the additional 20, and there's no impact on your income taxes. Okay, so if you are able to repay the amount of the loan, net of the grant, on time, nothing else is going to change on your taxes. So what you want to be careful of, if you change accountants or you do your own accounting and tax work, is that you don't end up declaring that as income twice. That you declared it as income in 2020 and 2021 when you got the money as CRA required. And then in 2022, when your accounting records show that you've earned the income, you pay tax on it again. So the fact that you have paid tax on it in 2020, the initial 10,000, and in 2021, the additional 10,000, means that when you pay it back in 2022, you should not have an additional taxable income at that time. So the example number two, you received 40,000 in 2020. You declared 10,000 of that as income in 2020 and paid tax on it. You don't pay it back on time. So if you don't pay it back on time, then in 2022, you are going to take a $10,000 tax deduction because you've already paid tax on the 10,000 grant and you didn't get the $10,000 grant. So you see the, kind of the cash flow implications here. When you received the CEBA, that's when you had the money. You paid tax on 10,000 of it in 2020. And if you got the extra, you paid tax on the extra in 2021. And now when the time comes to pay it back, if you do pay it back, well, then that's $30,000 out of your cash flow in 2022. If you don't pay it back, then you're going to have a tax deduction in 2022 which will save you the income tax presumably you paid back in 2020. But the only cash flow impact there is that you're saving taxes on the money that you weren't able to repay. Same thing would happen with the additional $20,000 that you received in 2021. You declared 10,000 of that in income in 2021. You don't pay it back. So in 2022, you're going to take a deduction for $10,000 in addition to the 10,000 for the first 40,000. And you're going to get a write-off of 20 grand on your return because you didn't pay it back. Does that make sense? Do you have any questions about that? I mean, I shouldn't ask you if it makes sense. Those are the rules. Is that clear? That if you end up not, in fact, paying back the grant, you are going to get a tax deduction for the amount you've already recorded as income. Company tax rate, if you're incorporated, then no, I wouldn't say your tax rate has changed. The tax bracket in Nova Scotia for an active business, if you're making less than $500,000 a year, the tax bracket is virtually the same. Anyway, 2022, we don't know yet, but there's no predictions that it's going to be substantially different. So as long as your income isn't over 500,000 in one of those years and under in the other, your tax rate should be virtually the same in both those years, I would say. So what if you don't pay it back? So as I've said, you have to pay the total amount less the grant to get the grant. There's no interest until January 1 of 2023. But after that, there's 5% interest per annum on the amount that you owe. And the different banks will have different ideas about that. I've seen that some people are going to be asking, or some banks are going to be asking for payments to be made monthly on that loan amount. You don't have to make any principal payments, according to the government anyway, on this loan, but you do have to fully repay it by December 31st, 2025. So there may be some strategy involved here. Is the interest rate at 5% a good interest rate? Could you borrow, cheaper than that? Or is that, are your loans going to be for more than that? The 5,000 is locked in till 2025. If interest rates go up, this might not be such a bad deal, but you've given up the grant, right? If you don't pay it back in order to keep the loan that's only at 5%, then you've left, $10,000 on the table. So I would suggest that it makes sense, if necessary, to borrow the money elsewhere to pay back the government and get the grant. Question in the chat. Yes, the interest cost on the 5% will be tax deductible. Yeah, so if you're paying 5% on 40,000 is going to be $2 grand a year. If you are paying the $2,000 a year, then that $2,000 is going to be deductible. We assume that the CEBA money went into the business and was used for business purposes for sure. So yeah, it would be deductible. Okay, so that's CEBA, which, as I've said, it's probably the most complicated of any of the ones we're dealing with. CERB. So there's CERB, and then there's a couple of other programs which we will take a look at in a second. The big issue in my mind with CERB was that there was no income tax withheld from the payments made to taxpayers. People got $500 a week, $2,000 a month, and they didn't have any tax taken off of that. So, I'm kind of intrigued by all this stuff around CERB, because I had people tell me that they were making more money on CERB than they would make if they went back to work. And I kept having to explain to them that if they were getting $500 a week without taxes off of it, then that was probably equivalent to about $300 a week after tax. And, I had some people go back to work and tell me they were making more on CERB. This, confused everybody, because most employees are used to, when they get a paycheck, they have had tax taken from it. So they don't expect to owe money. We had numerous people, even though I went on and on about it all year, expressed so much surprise that they owed money when in April of 2021, when they filed their 2020 taxes. They're all about I never owe income tax. How come I owe income tax? And you had to show them. I mean, you've got all this money you received from CERB and there was no tax taken off it. So, if we ever have to do this again, I would hope that the government pays a little more attention to this and takes some tax from it so that they don't create the problems they've created, which is firstly, that a bunch of people owe tax that don't have the money. And secondly, that people think they're making more money on CERB than they are because they're not considering their income tax. So because last year was an election year, in my personal opinion, remember my disclaimer, CRA and the government announced that when you filed your personal income tax return for 2020 in April of 2021, there would be no interest charged if you weren't able to pay on that tax bill until April 30th of 2022. So there was a whole year where if you owe the money, they're not asking you to pay it. They're not charging you interest on it. But the money, the tax bill is not going away. And, I think that's going to create a little bit of problems, more than a little bit maybe, come spring, when people owe for both 2020's taxes and for 2021's taxes, and they're both due in April. Yeah, a couple of things in the chat. The first thing was that we expected a lot of operators aren't going to be able to pay back the loans at December 31st, 2022. So the question, what is the penalty? There's no penalty except you don't get the grant. So if you borrowed 40,000, you can't afford to pay back 30. The penalty essentially is that you're leaving $10,000 you could have received on the table because you couldn't pay the money back, so you couldn't get the grant. And I would consider and start thinking about it, whether there's going to be other, whether, somebody could lend you, or the operator, the 30,000 to repay the money so that you still got to keep the 10,000. And that way, you still owe the money, but you owe it to somebody different. So you got the grant. The second comment, I totally agree, is that, if people had been getting $300 a week on CERB, they might have been more likely to go back to work because they would realize that they would make more money if they were working. And our labor shortage has a number of impacts. It's not all because people are sitting home on CERB. I mean, that does have an impact. I don't dispute that. But we also would have had some labor shortage anyway. We've got some demographic issues where we have the boomers largely retiring. There's a lot of them when they leave the market. Then they leave a hole behind. We haven't had any amount of immigration since COVID started, which of course has an impact on our labor availability. And there's other people that are talking about in states, they're going on about the great resignation, that so many people have left the restaurant business and the hospitality business because when they had time to sit home and think about it, turns out they didn't want to do it, which, I don't know. I'm an accountant, not a psychologist, so I don't know if that's true. But I do know that there would be labor shortages anyway, because we do have some demographic issues with more people retiring than are entering the market. There are a bunch of these other programs. We mostly talk about CERB, but we had a bunch of other programs that were treated the same way. If people are receiving these kinds of money, this kind of money on their 20 or their 2021 tax return, then, or sorry, on 2020 for sure, I'm getting ahead of myself there, then their tax was deferred. So we've talked about CERB. There was also a student benefit for people in full-time school that they could receive, the Canada Emergency Student Benefit. That amount was taxable. But if you owed tax on your 2020 return because of that, you've got another year to pay it. The CRB, which really replaced CERB, but we still keep calling it CERB. That is, again, if you receive that money, you've got another year to pay the taxes from 2020. And there's a couple of programs where you can get a couple of weeks, sometimes maybe a couple of months of payments if you do contract COVID and you're sick, or you're helping other people, family members recover from COVID. And those are called the Canada Recovery Caregiving Benefit and the Canada Recovery Sickness Benefit. There's been a lot more acronyms created since COVID. We have many of these things to deal with, but any of this income that was received in 2020 is going to be, it's deferred. You don't have to pay it till 2021. So what I just said. So here's the question in my mind. In 2020, personal income tax is due April 30th of 2022. And the 2021 personal income tax balance is also due April 30th of 2022. So one of the things that I have said forever is there's no good year to pay 2 years taxes. When I am talking to business owners who are just getting started, I'm really careful to make sure that they understand their earning income that hasn't had tax withheld from it at this point. So they need to be setting aside some taxes. So I can't tell you the number of people that have sat in my conference room after their first year in business, and I tell them they owe 10 grand or 20 grand or whatever. And they're just amazed that they could owe that much money because they've been employees in the past. They've always had tax taken from their paychecks before they get it. And they don't understand until, once it's explained to them, they understand that they don't have any customers who are taking money from their pay and sending it to the government. So, these people that tell me, well, they've never owed tax before. I said, you haven't paid any tax this year. So if you don't pay any tax in, come April, you're going to owe all this money. So now, if this happens this year, April 2022, I'm telling somebody that they owe a bunch of money for 21. Well, they're already 4 months into 2022. So it's hard to get caught up. If any of you have had that experience, you get behind with CRA, and CRA is charging you interest on the money you owe them, and they're compounding that money every day. It's hard to get ahead. So one of the things we wanted to make sure we covered, on this call today is any of you that know you owe money for April 30th of 2022 because of 2020, that you know how much it is. And hopefully there's a way, you've been setting aside some money this year to pay that tax when the time comes, and been thinking a bit about how much tax are you going to owe for 2021. Because it's interest free right now. You don't owe them any interest until May 1st of 2022. But once May 1st comes along, and the money hasn't been paid, well, now they're going to start charging interest, compounded daily, and it really does add up. Now, the other possibility, and again, I'm not a politician, is that they're going to decide to give people more time. The impact of having a couple million people owe money to CRA that they can't afford to pay all at once. Is it possible that they'll extend the deadline again? Or they'll extend the deadline for 2021, but stick with the deadline they've got in 2020. And last year was an election year. So I always feel they're more agreeable to these kinds of things when they're looking to be reelected. But this is me as a cynic, whether that'll happen this year. And then there's also been all these rumors about how they're probably just going to forgive it. I don't know if that's true, but it's a lot of work for CRA to try to collect a couple of grand from a couple of million people when likely those people don't have the ability to pay it back right away. So, we may see some more activity on this. It's still 5 months until April 30th when this amount would be due. I don't know if, anybody is, if they're thinking about it yet and trying to decide, what they're going to do about it. Okay, a couple of things around CERB. I've got kind of the same comment on CERB that I had on this wage subsidies, is that, at the time when they were giving people CERB, they were the politicians, shoveling the money out the door kind of thing. And then we have had issues with the bureaucrats are starting to take a look at some of these programs and decide if people receive them when they wouldn't, when they shouldn't have received it. So a couple of things. Initially, when CERB came out, it wasn't available to people who were self-employed, essentially, unless they showed more than $5,000 in income in 2019 through self-employment. So that created, some excitement because people don't really know the difference between income and revenue, we found. The other thing was initially you couldn't get CERB if you paid yourself by way of dividend. And, I have a lot of clients who only take dividends out of their corporation. They don't take a salary. They just pay themselves dividends. And part of that reason is because they don't want to pay into the CPP program. And that reason is because they're paying both as an employee and an employer. So if you are paying both halves of CPP and you're making more than 48 grand a year, you are likely paying $5,500 a year in CPP. And not everyone thinks that's worth it. So a lot of my clients are taking dividends. So initially, I spent so much time in the spring of 2020 figuring out these programs, talking to my clients about them. I had probably told 40 people they weren't eligible to get CERB before the rules were changed, that as long as you were taking dividends out of your corporation that were other than eligible, which means actually you're an active business, then you are going to be able to get CERB. So I've told all these people they can't get it, and then I have to call them all back and tell them that the rules have changed, and the rules continue to evolve. So, there is some confusion around some people receiving CERB that shouldn't have. We'll talk about that in a sec. Something in the chat. Okay, so first of all, we've got a comment that, people are going to end up with their wages garnished over a couple of years, likely. I mean, and that's more work for the employers, of course, keeping up with the garnish of wages. So the question, what's the difference between dividends and other than eligible dividends? So this is the confusion that is CRA, but an eligible dividend is paid out of a business that is either a public company or that dividend has been paid from income over $500,000 earned by that corporation. So for 95% of businesses, small business owners, their dividends are reported on their T5 as other than eligible. So generally, if you were, a business owner with a small business, your dividends are other than eligible, and you would have been eligible for CERB. Okay, so just a quick thing on income statement. The issue here, if this had applied to anyone is this first scenario here. There's sales of $5,000. When we subtract all the expenses, we only have income of $1,050. This person is not eligible for CERB because they weren't making enough money in the prior year to get CERB. The person in the next column here, who started out with more sales, paid all their expenses, and had an income from operation of $5,000, they were eligible for CERB because they had an income of $5,000. There was widespread confusion that if you had revenue of $5,000, you were entitled to CERB, whereas the deal was if you had income of $5,000, you're entitled to CERB. So the initial conversations around this have been that since CRA didn't make it as clear as they should have, that they're not going to go after people who claimed CERB when they shouldn't have. And I find it kind of interesting that, why would somebody think they were entitled to $2,000 a month for CERB if they were only making $1,000 last year before the COVID struck? So there are situations where people have received benefits that far exceeded the amount that they lost because of COVID. Okay. No. Okay. So the question in the chat is about the clarification on the dividends. If your company is making less than $500,000 a year and is paying you a dividend, those dividends are other than eligible. So you would be entitled to CERB if you had previously compensated yourself with dividends from a small business. The way to be absolutely clear is take a look at your T5, the form that would have been prepared by your accountant from your corporation, and very, very likely the block where your money is shown is in the block that's called other than eligible.
I don't know why we can't have two different names for it. You know, why couldn't we have, you know, large company dividends and small company dividends? Then we'd all understand it. There's a lot of people that do their T5s wrong because they just put their numbers in eligible when, unless you're a public company, your dividends are not eligible. Okay, so this scenario right now, what CRA is saying is that they're not going after people who made this mistake, who confused sales of $5,000 with income of $5,000. But you know that CRA had that information before they granted CERB. They would have easily been able to look at that to see if the person was actually eligible. Okay, pretty much the last thing I got here. Provincial money. Now, provincial money is nowhere near as complicated as some of these grants, or sorry, as CEBA for sure. There were amounts provided by the province. What they did is they got Dalhousie University and Halifax to administer all of these this money. So so far what I have seen is that everybody who got money from the province got a T4A form from Dalhousie University. A lot of these grants were like 5,000 for this, 5,000 for that. So the T4A form from Dalhousie will say what kind of income it is. One of the thing to watch out for is that you don't end up double counting this income if you are an individual. So business or tourism operators that are not incorporated are filing a form 2125 with with CRA to report their income. And there's a place on the 2125 where you put income from T4As. Okay, so when we're doing someone's tax return, we of course will report all the income from T4As that they receive. We have to be very careful that they didn't include that income in just their revenue that they're showing. So let's imagine somebody has revenue of $50,000 a year and 10,000 of it's on the T4A. Okay, so we would show revenue of 40, T4A income of 10, so that the total of 50,000 was the actual total it should be. The risk is that you look at your SAGE file and it says you made 50 grand, you put the 50 grand on the tax return, and then you add the 10,000 from the T4A. Okay, so your accounting systems should enable you to know how much income you received. If the T4A income is included on your accounting income, make sure you don't double count that. There also may be some confusion about whether it was received by you as an individual or received by your corporation. So you want to be sure that doesn't get double counted as well. Because the problems we have with that is, you know, I'll have a client that reports their corporate income, including an amount that they then get a T4A that was made out to them personally. So the easiest way to fix that is to have the person who issued the T4A fix it so that it's issued to the corporation, because that's what actually happened. But sometimes you can't make that happen. And there's a lot of fooling around to get that fixed. Okay. What else do you guys want to know? I have talked about the wage subsidies. I've talked about CEBA. I've talked about CERB. I've talked about T4As. We still have a few minutes left. Anybody have any other questions they wanted to ask about this kind of stuff? How can we access this recording? Okay, that's a question for Lynn or Pam. The recording will be available as I can also make the slides, PDF of the slides available if people are interested in that.
Hi.
Oh, hi there. This is Pam. I just want to let people know we're going to be posting that to Facebook in the next couple of days. So just keep an eye out. Okay, well, if there's no more questions, I would just like to take a second to thank Debbie on behalf of Tie-Ins. It was a fantastic presentation and I really hope it helped everybody. So thanks for joining us today. I'd also like to remind people about the Tourism Reactivation of Industry program, which has brought Debbie to us today. Please get in touch. You can get in touch with me pam@tourism.ca, or you can contact the tie-ins office directly. We offer through the program business guidance support through expert advisors. So please keep that in mind if there's anything you need help with, including specifics beyond what we spoke about today. We hope also that you can join us on Tuesday, November 30th for our virtual mental health workshop. It's called Rebuilding Our Resilience with the Canadian Mental Health Association, Nova Scotia branch. Registration is still open on tourismstrong.ca. So thanks again, everybody. Thank you very much, Debbie. That was fantastic. You certainly know your stuff. And thanks for attending today, guys. Have a great day. Thank you.